Welcome to Home Learning. In our accounts lesson today, we are going to be looking at how to correct errors that affect the balancing of our trial balance. In our correction of errors, we will be mainly focusing on our suspense account. The suspense account will then lead us in showing how these effects will affect our net profit in the financial year. We will start by defining what a suspense account is. As I have mentioned, that a suspense account is going to be used to record transactions that have affected the balancing of the trial balance. This is an account that the bookkeeper or the accountant is going to open in order to try and investigate. Maybe the bookkeeper has investigated and has still not found the error, as we have seen in the previous lesson. So a suspense account is going to be opened to ensure that both the debit and the credit side of the trial balance, they balance up. The word suspense simply means it is for a short time. We are suspending the amount of money until we discover the error. Then we correct the error. Suspense account is going to be then closed down for that given period. We are going to be looking at errors that are going to affect the balancing of the trial balance. Let me give you one example. We have a trial balance, or we are given a trial balance at that given period. And in my trial balance, I have the debit side and the credit side. Then the total for the accounts on the debit side, total of accounts on the debit side, it amounted to 100,000, and the total on the credit side of the accounts, it amounted to 99,960. When we prepare a trial balance, we know that both the debit and the credit side should give us the same figure. But in this case, it has not given us the same figure. Under normal circumstances, we will expect the figure to be 100,000 on both sides. But on the credit side, it is 99,960. And we have tried to look for the errors, but so far we have not traced them. What are we going to do therefore? We are going to have this account called suspense, so that the credit side also gives us 100,000. Our suspense will be 40. When we add 40 to 99,960, it gives us 100,000. We are not saying we will leave the trial balance like this. We need to investigate further so that we do away with the suspense account, as it is a temporal account until we discover where we have made the errors. An example of an error in this case could be, let us assume by 40 emalangeni. Let us assume that the sales account had been undercosted by 40 emalangeni. In this case, we have seen the suspense account being 40 emalangeni. We have seen the total for the debit side being 100,000. What are we going to do now? That simply means the 40 emalangeni, instead of writing suspense account, it was supposed to be for the sales account. If sales account had been undercasted, that means we have recorded less value to the sales account than we were supposed to record. Instead of writing suspense account, then it's going to be the sales account. Sales account, it was undercasted, so we are going to say 40 emalangeni as we are adding. We are adding to what? We are adding to the amount of the sales. It was undercasted. We are removing what? The suspense account. Our suspense account had a balance on the credit side, as we have seen. It had a balance on the credit side of 40 emalangeni. For every credit entry, there must be a corresponding debit entry. Then we have discovered the error that it was sales account 40 emalangeni. Therefore, our suspense account has been cleared. Our suspense account has been cleared. We are no more going to have suspense account in our trial balance. In that way, instead of going to the trial balance and repeating suspense account, remember the trial balance is prepared using what? The ledger balances. Suspense account now does not have any balance carried down or balance brought down. So what will have a balance brought down? It is the sales account. So our trial balance will therefore, the trial balance, will therefore debit and credit. The total for the other accounts, still remains on the debit side as 100,000, and the total for the other accounts on the credit side still remains at 99,960. But now we have corrected and we discovered that it was the sales. Sales accounts do appear in our books of accounts. Sales accounts 40 emalangeni. Therefore, it balances up. $100,000. So simple to correct a suspense, using a suspense account. So simple to correct errors that affects the balancing of the trial balance. It affects in what way? We have seen the debit side being 100,000. We have seen the credit side being a lesser amount of 99,960. So that means our trial balance has been affected. Our trial balance has been affected. Let us look into another example. Let us look into another example. Example 2, a trial balance on 31st March had a difference. Trial balance. This was a shortage on the debit side. As we move further, trying to investigate in our books of accounts, what are we going to find out? On 31st May, the error was found, and we made a payment of 168 to KL. Payment, the error was a payment, and this payment, it was not shown. It was correctly entered in the cash book, that is the book of original entry, but was not entered in Kaylee's account. That means our cash account was including this amount of money. But when we had to do our double entry, we did not do it correctly. We did not have a credit transfer of this account. When we look into the trial balance, the debit side of the trial balance was less by 168. It was less by 168. When we tried to investigate, we discovered the error, which was a payment made to K-League of 168, which was correctly, recorded in the cash book. But not in the personal account. But not in the personal account. The personal account is who? The personal account is going to be K-League. So we need to record in K-League account. So that because of the trial balance, definitely we now have the next entry, which is the suspense account, as we have opened in order to investigate. Let us use our ledger. In our ledger account, we are going to have the suspense account. Suspense account. In our suspense account, we have a balance. As they have said, it was on the debit side. The debit side of the trial balance did not balance up. So that is why we have the balance on the debit side. Balance, the date was 31st of March, a balance of 168. There was a balance of 168. Now we are correcting the error. We want to close the suspense account. We want to close the suspense account because in our financial year, we should not have a suspense account, but only when we are trying to allocate or investigate errors. Then the error has been identified as an amount of money of 168, which was paid for cash to K-League. It was correctly entered in the cash book. We made a payment, so our cash account was debited. Therefore, we had to credit who? Our K-League. We made a payment to K-League. K-League account. K-League account received 168 cash. You received 168 cash. This amount of money is now going to be shown in our suspense account, simply because it does appear in our cash book. Therefore, for every debit entry, there must be a corresponding credit entry, 168, which is K-League. Which is K-League. When we look into this, what has happened to our suspense account? It has been closed. Our suspense account has been closed, but what is there? We now have the personal account, which we have made a payment to. This personal account is our creditor. This personal account is our creditor, and we have made a payment to our creditor of 168. Therefore, our trial balance is definitely going to balance up. I hope we are still together. This is just on one error. Let us look when there are several errors which we need to include in our suspense account. When there are several errors that we need to include in our suspense account. We are going to look into just three 3 of them. A trial balance showed a difference of 77. Which was a shortage on the debit side. Then we need to open a suspense account to show the difference. Before we open the suspense account, let us look into the errors that were discovered. The errors that were discovered, as we move on, a check of 150 paid to LK, a check. That's the first error. The second error that we discovered, purchases account had been undercasted by 20 emalangeni. Purchases account The third error that we discovered, a check of 39 received from K-Send had been correctly entered in the cash book, but had not been entered in Send's account. Check. It was not entered in the personal account. We've got these 3 transactions that we need to talk about. We've got these 3 transactions we're going to be talking about. The 3 errors, the first one, it was a check of 150. This is an error. It was not recorded in L. Kent's account, but it was recorded in our cash book. That means our bank account is correctly recorded. So we need to have another entry of this one. When we move into part B, purchases were undercasted. We have an undercast. The other entry is correctly recorded, but we have an undercast of 20 emalangeni. That is the second error. The last error that we are going to be looking at, it is a check of 93 that we have received from K-Send, which was not recorded. These are the 3 errors, which will include this difference in our suspense account. The difference is on the debit side. Our difference is on the debit side. This is very important for you to understand when you are recording, more especially in your suspense account. You need to pay attention to the side that they tell you about. They will definitely tell you about the side, or you will have to calculate and find it yourself, that the shortage is either on the debit side and credit side, then record the suspense account where there was a shortage. Let us prepare the books of accounts therefore. We are going to start with the suspense account, which is the account that we want to close down, the suspense account. This is the account that we want to close down. They said the difference was on the debit side, so we record the difference on the debit side as 77 emalangeni according to our example here. This was on 2011, 28 February. 28 February is our date. We discovered these errors. The first error, it was a check of 150 paid to L. Kent, which was not recorded in L. Kent's account. So therefore, we need to open L. Kent account. L. Kent account. L. Kent account must be debited on 28/02 with suspense account. How much was the amount of money? It was 150. Suspense account, therefore, is going to be credited. 28 February by L. Kent. 150. Are we able to close the suspense account? No. Still the credit side is more than the debit side. That means we still need to go down to error number 2. Error number 2, the purchases account had been undercosted by 20. What will then happen? We will open purchases account, and undercast to the purchases. Purchases account have got a debit balance, so therefore the error discovered 28, suspense account, and undercast of 20 emalangeni. Therefore, we go to the suspense account and write purchases account. For every debit entry, there must be a corresponding credit entry of 20 emalangeni. Still the date of the error discovered was 28. Then we move on to the last one. Still, we are increasing the credit side. Okay, let's look into the last one. The last one says a check of 93 that we received from KSend had been correctly entered in the cash book, but had not been entered to Send's account. It has not been entered to Send's account. Send's account must be credited and the suspense account to be debited. Let's look to the suspense account. Send's account 93. We are going to open the suspense account. Let me quickly show the balancing of our suspense account. It's 0, 7, 1. That's 10, 170. Isn't it our suspense account balancing now? We did not have to force the suspense account to balance, but we had to follow the principles of recording in the books of account. Debit the receiver, credit the giver. Then our suspense account automatically balanced up. That simply means we were able to close the account after we have corrected the errors that were given to us. We were able to correct the suspense account after the errors given to us. Then the suspense account, therefore, is no more going to appear in our trial balance because we have closed the suspense account. What will appear? It is the personal accounts plus the purchases account, which is L. Kent account, purchases account, and the Send's account, because they are still having the balances in the ledger. That's how simple a suspense account. For you to correctly record in the suspense account, there are two main things that I would like to emphasize on. The first one, note the difference, the side that has or that shows the difference. This is very important. Note the side that shows the difference. Then record on the side, record the suspense account. Record the suspense account. This is when you are not given that the difference is a shortage on the debit side or the credit side. You are just given list of balances extracted from the ledger. Then when you calculate in a trial balance, you will definitely spot the side that has got a lesser difference. Then you will need to record in the suspense account on that side. Do not do double entry and say, because trial balance did not balance up on the debit side, so I'll record suspense account on the credit side. No, it does not operate that way, but it must be recorded on the side. Secondly, what you need to pay attention is the basic accounting principle. The basic accounting principle. When the errors are identified, reflect on your accounting principle. Debit, the receiver; credit, the giver. That's the principle I want us to look into and focus on it when we are preparing or trying to correct using the suspense account. You are given the error, purchases under custody, for example. Purchases under custody, you look into the receiving account. It is an undercast. That simply means it was recorded lesser than the amount, the actual amount of money it was supposed to be recorded. Then we need to add the 20 emalangeni as we have shown. Then which account is receiving? Definitely the purchases account is the receiving account. So therefore, we need to add to the purchases account, thus debiting the purchases account. Can you see how easy it is? No one needs to tell you that, but once you know and master the basic principle, debit the receiver, credit the giver, you will never go wrong. You will find suspense account so simple as it is. It is like A plus C. That is why I love accounts, because everything in accounts is based on just this principle. Once you understand the principle, you will never go wrong. I want us then to move to the last part of our lesson. Trying after you have mastered this too. In our last part, we are going to be looking at the effects of these errors in terms of our net profit. What will be the effect of the errors in terms of our net profit? When we are talking about a business, we are talking about an entity that is aimed at making profit. So if we are going to be making such mistakes, we are definitely in one way or the other affecting our net profit. We are in one way or the other affecting our net profit. Before we get to the errors specifically, I want us to reflect on what compounds or what accounts are going to affect the net profit in general. When we calculate for our net profit, we are going to use a statement called an income statement. We are going to have a statement called an income statement. Under the income statement, we have got two components, which, when we remind ourselves, it is the trading account. The trading account. When we prepare a trading account, we are trying to get what? The gross profit. We are trying to get the gross profit, which we can refer to it as the GP. Then the second component, it is the profit and loss account. The profit and loss account, which we use now specifically for our net profit. For our net profit. When we look into our income statement. It is divided into two, but definitely for you to get the net profit, you first have to know your gross profit. So transactions or accounts that will affect the trading account will definitely have an impact on your net profit. Indirectly have an impact to your net profit. Let us look at how we prepare the trading account. We are just reflecting on this, the trading account. I will not write the whole heading, but when we prepare the trading account, we start with our sales, which someone will say turnover of 3,000, then less cost of goods. We are reflecting on this, less cost of goods. It's comprised of what? Of stock. The stock could be opening stock. We could have started with opening stock, and there is also what? The closing stock. And this is going to give us what? Our gross profit. This will give us our gross profit. We've got purchases of 2,000 less closing stock, because it's stock that we have not sold, less closing stock of 700. Therefore, the total for the cost of goods sold is going to be 1,300. So if it is 1,300, our gross profit therefore will be at the value 007 1,700. So if it is 1,700 gross profit, this gross profit has to be transferred to what? It has to be transferred to our net profit, which is going to help us to calculate our net profit. So where is our net profit? Our net profit is going to be found in our profit and loss account. We open the profit and loss account. Our profit and loss account will be gross profit, the one that we have calculated. It is 1,700 less expenses. These expenses we have seen in our ledger, we have seen in our trial balance. Everything that we record is taken from our trial balance. So expenses could be what? It could be rent for shop, 60 emalangeni. Could be insurance of 120 emalangeni. It could be wages and salaries of 800 emalangeni. For now, let's say our expenses are just these three. They can be more than three for the purposes of this exercise. Then total for expenses is going to be 980 emalangeni. We had said less expenses, which simple means our net profit, therefore. What are we saying with our net profit? We are therefore going to be looking into these accounts that we have shown or have been recorded in this tool, which is the rent, the insurance, the wages. When we go back to the trading account, there are sales and there are purchases. If an error affects these transactions or these accounts, definitely it will have a direct or an indirect effect to our net profit. It will have a direct or an indirect effect to our net profit. When we look or reflect to our trading account, we have not seen personal accounts, but the only account that we have seen is the sales account. That simply means debtors, they do not affect our net profit. When we look into the previous exercise that we have been given, one, it was a check paid to who is our creditor, because we have made a payment to someone. That means we have paid a creditor. Creditors are not shown in the trading account or the profit and loss account, so therefore that amount of money does not affect what? Our net profit. The second one, it is purchases had been undercasted by 20 emalangeni. That's a previous example. What are we saying? Purchases are recorded in the trading account. So in one way or the other, we have underestimated what? Our purchases. So when we subtracted the purchases from our sales, we are subtracted what? Less amount of money. That simply means we need to subtract more. It will affect what? The gross profit, which is this one. So our gross profit in this case is more by what? 20 emalangeni. We need to further subtract the underestimated value of 20 emalangeni. So it will have an effect to what? To our net profit. If we subtract the 20 emalangeni, which was purchases undercasted, our gross profit will be at 1,680. That will be our net profit. Our gross profit, and our net profit will therefore be less by, it will end up being, which is 0, 0, 16 minus 9, it is 7, 1. Our net profit will end up being 1,700 instead of the 720. That is an effect to our net profit. Although it was not direct, it was indirect, but it did have an effect to our net profit. Let us give another example to show the effect to our net profit. An error, 1st November, an error, we made a payment to a creditor. We are saying we made a payment, cash account is recorded where? In the balance sheet. In the final books of accounts, it is recorded in the balance sheet. T-Monk is what? Is our creditor. Creditors are recorded where? In our balance sheet. So do this transaction affect our net profit? No, not in any way. So we are going to show that there is no effect in our net profit. We are focusing on our net profit. It has affected our trial balance, but there is no effect in our net profit. Then the next one, it is a debit. We made a payment of 80 emalangeni, The rent account, therefore, has been undercasted by how much? By 80 emalangeni. we have seen this in our profit and loss account. We record rent account. That simply means a rent account was done what? It was undercosted. Therefore, it has overstated the effect. It was an overstated net profit. We were supposed to reduce or subtract rent account by 80. We used 60 emalangeni. We're supposed to add 60 and 80, therefore giving us what? Giving us 140. But how much did we subtract? When you reflect back to the exercise we did, we only subtracted 60 emalangeni. Can you see the effect? There was an effect because rent account is recorded directly to the profit and loss, which calculates for net profit. I hope you do understand the meaning of the effect of the net profit to the errors. When we look into the error, you should first understand in which of the financial books of accounts do we record, or is this account appearing in. We looked into the trading account and we have looked into the profit and loss account, trying to reflect on the accounts that we record in these two income statements. Then we discovered that some of the accounts we are going to find in the trial balance do not affect our net profit. So these accounts are going to be liabilities. These accounts are going to be liabilities. These accounts are going to be assets. When we look into our fixed assets and some of our current assets, excluding what? Excluding stock. Excluding stock. Why exclude stock? Because stock is recorded in our trading account. It is part of what we are selling. Stock is part of what we are selling, and it must be subtracted from our sales. So liabilities and assets in terms of fixed assets or current assets will not appear in our income statement. So what appears in our income statement? In our income statement, we're going to show all incomes of the business, and we are going to show all expenses of the business. Some people will be specific on this and say they are general expenses of the business. General expenses of the business. Because we know even fixed assets are expenses of the business. We know that liabilities are expenses of the business. The effect to our net profit. The effects of these errors. We have learned that there are errors that affect the trial balancing, and there are errors that do not affect the trial balance. But all of these errors, if not corrected, they will have an effect on our net profit. We have seen some of the examples in today's lesson, some of the effects in today's lesson. From the example that I have given, I want just to briefly show you how you can correct now the net profit. I did correct the net profit, but in a proper way. statement of corrected profit. What is going to happen is you first write the net profit that you calculated before you identified the errors. The net profit we had before we identified the errors, it was at 3,000. Then we discovered we had undercasted purchases, undercast of purchases by 20 Emalangeni. So if it was an undercast, we need to include. That simply means we are going to subtract purchases undercasted. Purchases undercasted which was how much? Which was 20 Emalangeni. Purchases undercasted was 20 Emalangeni. Did we have any other error that affected? No, it was just this error that affected the net profit, because we had said the first one, it was a creditor. The second one, we received a check. That was our debtor. So creditors and debtors appear in what? In our balance sheet. So this is the error, the only error that affects our net profit. Therefore, corrected net profit is this one. Corrected net profit is going to be 2,980. That is if the question, your exam question, require you to then show the corrected net profit. We had 3 of these errors. One only affected the net profit, but the 2 will only affect our balance sheet. So we will not include them here. If we are given that our net profit, it is at 3,000, we need to correct it. After the error had been corrected, our net profit was therefore 2,980. This is what we are expected to know in terms of correction of errors, in terms of their effect to our net profit, in terms of their effects to our net profits. In our lesson today, we have found that it is very important to know our double entry system. Double entry system. You will not be able to further prepare your books of accounts if you are still weak in your double entry system. If you've got a challenge, please sit down, go back, even in your Form 1 book, you can take it and try to do your double entry system until you master it. This is also going to affect us in the next lessons that we're going to be going through in terms of reconciliation statements, control accounts. They are all based on double entry system. We have seen in the correction of errors that double entry system is very, very important. The error that we had to correct for suspense account was due to the fact that double entry system was not followed. Double entry system was not observed. We only recorded correctly in one account, but could not post the same transaction to the other account that it also affects. So double entry system is very important. Number 2, we have observed in this exercise or in this lesson that the principle of account is also important. What do we mean by the principle of account? We are referring to debit, the receiver, and credit, the giver. Debit, the receiver, credit, the giver. This principle of account assisted us when we were correcting the errors. We were able to know and understand the account that is given, thus debited that account, so that we are able to then transfer or post to the suspense account for us to close the suspense account. Remember, suspense account is a temporal account in a business whilst we are trying to investigate and correct the errors. Without knowing the principle of account, debit the receiver, credit the giver, you will have a challenge in the double entry system. You will then further make more mistakes. For example, an error that we learned in the previous lesson, which was an error of complete reversal. That is, you failed to record on the correct side. You lack in the principle of account, the basic principle of account. We also talked about the suspense account being a temporal account. A suspense account being a temporal account. Therefore, I will emphasize this. Suspense account should not, in any case, after you have corrected your errors, have a balance brought down or a balance carried down. It is a temporal account that needs to be closed immediately you have identified and corrected the errors. Suspense account should not have balance carried down or balance brought down after you have identified and corrected the errors. It will have an opening balance because that's the balance we are trying to do what? To correct. That is why it will have that opening, only the opening balance, but will not have the closing balances. That was our lesson for today, and I hope you are going to pay attention to these two, the first two, so that when you continue or you further study accounting, it will be very easy for you. Thank you for being with us in home learning. See you in the next lesson.